Hi, welcome to the Oak Trader report on the 5th of January. These were put together over the weekend and I'm recording this on Monday evening, just coming up to 10 o'clock Hong Kong time. And I just thought I'd start off with a Forex chart of the USD versus CAD, Canadian dollar, then a few charts in the protection safety sector, cosmetic and toiletries and hotels and motels. We covered this a while back on the Oak Trader. I've been back in the USD against the Canadian now for well over a year, and I've talked about this in previous Oak Trader reports, how I feel this is developing into a nice uptrend and breaking out. It may well have a shakeout from here. Quite often it does, as it breaks out of the long-term resistance where my mouse is. If you draw a long flat line, as these couple of bars here are breaking out, we could see it come back down briefly. But over the next couple of years, a year and a half to 2 years, I'm very confident we're going to see the US dollar gain against the Canadian and move up to around the 110 to 115 level, perhaps even higher. But definitely for the next year and a half, my personal opinion is that the US dollar is going to gain significantly against the Canadian. So be careful of that. I know a lot of my subscribers and other investors have switched out of US dollars over a number of years, and sometimes people aren't very fluid in terms of changing their prognosis on the market. And the way I see it, long term, Canada's probably a better fundamental bet, but we're talking 50, 100 years in the future. You can't really trade and make money off that. The next couple of years, the US dollar looks like it's developing quite a nice bit of technical strength here against the Canadian. And this is the first stock in the sector, UUU, good ticker symbol there. Big cut off on the downtrend. Short sellers cashing out, pushing the market higher. A little bit of a false breakout here. Anyone that tracks accumulation cycles will know they wouldn't really have been tricked by this because of the shortness here, but potentially you might have lost a couple of dollars on a position once it had broken this uptrend here and had come back down. But again, this accumulation and head and shoulders really wasn't enough time to feel confident. And of course, the breaking of this trend here to this trend, and this would bring you out of the market, flat the market, so your risk is very minimal for an upside chance that it could break out quite quickly, as some stocks do. So long as you're protecting yourself the downside, draw a trend line just here, sell out, then you wouldn't have had to hold on for a couple of a year and a half, and you wouldn't have had to be holding on to a loss either. So if you draw a line along here, you can see that the market's clearly broken that with this move here. The time to buy for me is when this trend line breaks here, and I believe that will happen quite soon, and I'll be looking for this market to go much higher from here over the next year and a half to 2 years. And if you look back in history, you can see the previous accumulation actions building into a strong uptrend, finishing with a parabolic spike. Not too much distribution here, but perhaps they managed to distribute a hell of a lot on these spikes upwards. A lot of people talk about in history, and other market commentators, even if they ever do talk about professional distribution, they talk about it happening on the down legs, on the down bars, but from my experience that's not the case. 90% of distribution happens when the trend is in the upward cycle and in the distribution phase, not once it's broken out of the distribution phase. But you can clearly see here the difference, the parabolic spikes and the wild swings in comparison to these consolidation levels. Perhaps maybe this would have fooled us, and this shakeout here, but if you draw a line along the trend would have probably cut us out if we were strictly doing it on an automated basis around the 22 level. But I remember with this particular stock, when you're tracking it and you're using your own judgment and you're not solely making your decisions based off a computer. You can make your own decisions, and what I like to do is draw a trend line. When it's a steady trend line, I'm happy, and when the market spikes up parabolically, that's the time I start being cautious and looking for a spot to sell. It doesn't really matter if it breaks the trend line, so long as I see a couple of months worth of distribution, I'm quite happy to get rid of most of what I hold and look for another opportunity where I can buy in low again. There's no point in being greedy, but the trend lines serve you well, especially the long trend lines. Ticker UEPS. This is a daily chart here. Just wanted to show you this gap up and then the gap down, fill in the gap here, which Gann quite often talked about, the filling a gap. So I'm not really that bothered or that clued up, because most of the time it is quite short term about this, but I have noticed this over the last 16 years in terms of looking at these types of opportunities, that gaps do often get filled, and I wouldn't be surprised to see this gap here get filled pretty soon on the upside. But this stock here was showing good signs of accumulation here, breakout with extreme power, and then we've come back down for what I believe is the shakeout, and I'll explain why I believe it's the shakeout, because you can see with this long-term downtrend being broken, this gradual downtrend line being broken by this spike here that we saw on the daily, that the technical position has changed. So we've gone from a downward trending market to a sideways trending market. So what we're looking here from this pivotal point to draw a trend line up and to follow that up. If it breaks that trend line on the downside, maybe sell out for a little while and watch the market, just to be on the safer side. But once it breaks the trend here, if you draw a pivotal point from the pivotal point here and draw it down, once it breaks that on the upside, and you can use the daily for confirmation as well for the breaking of the trend, for what would look like the beginning of a new uptrend, I feel should happen very soon. Potentially sometime in the next 2 to 3 months, but definitely within the next couple of years, I see this stock moving much higher to around the $10, $15, $20 level. Ticker LOJN, and you've got a bit of a head and shoulders here where my mouse is, and just here as well, and you've got the trends being broken, the gradual downtrend, the steeper downtrend here, and then the big steep downtrend if you draw a line straight down. So you've got 3 confirmation trend signals there that are long term that have been broken, and if you draw a line here from the pivotal point up to here and keep following this market, so long as it doesn't break that trend line, it should be good to go to move up to at least 6, and then from there test this resistance here, and this stock LOJN looks to be a good one over the next couple of years to move up to at least the $6 to $8 level. Ticker DGLY, big downtrend here. Couldn't really call it gradual because it went from 25 all the way down to around a couple of dollars, so I wouldn't call that gradual, and I wouldn't call this a medium downtrend either. It was steep, going all the way down from 90 to around the $10 level, and then coming up to 25, and then coming all the way down to the $2 level. So it looks like the shakeout in terms of getting rid of who they needed to get rid of out of this stock has begun with this sideways action here, but you can definitely tell that this stock has had huge fundamental issues and problems with the length of the drop, and quite often stocks that do have huge drops do take quite a lot of time to recover, unless it's totally been a situation where the market has panicked and misjudged a valuation ridiculously, and it jumps back up to a valuation that people believe it should be, like I'll show you on a hotel chart a bit later on. But this looks like it's developing here, and if you draw a line here, just along here, use this as the trend line, and this here where my mouse is, draw a line. So long as it doesn't break that and it holds that area, I feel that this is good to go quite a bit higher, but we could see some further action here in terms of a base developing purely because of the harshness of the drop from 2008. And this is a great point. I'll just cover this quickly before we go. We so often see this, where we see the market going sideways or in a position, and then it has what you call a false move. It moves for 5-6 months in the wrong direction. And you see that in the commodities markets. It might be a week or two, say in coffee, you're waiting for the market to take off, you're sure it's going to take off, and then for a week it completely goes the opposite direction and shakes a lot of people out. And if you're too highly leveraged, that's what can kill you in the market. But you see this market, once you drew a trend line and it broke it and it curved back around and then it broke out of this consolidation area, it had a huge move up, and you can easily identify the distribution bars here where my mouse is in 2008. Ticker APT, great looking weekly chart here, fantastically put together, 50-cent parameters. You've got a bit of a head and shoulders here, the inverted shoulders, the shoulder and then the head down here, and then slowly moving up. Now this is what I call a gradual downtrend, going from say $2 all the way down to $1.50 over say 7 or 8 months. That can really frustrate anyone who's in this particular stock, and that can make them sell out in frustration when the market's so flat and boring where my mouse is like this. And that's exactly what we're looking for. We're looking for markets that really test the patience of anyone who's invested in it, or sometimes people invest in a stock by accident or because someone's recommended it or a brother-in-law works for the company, and they just get fed up of tracking it. They want to see action on their stock. And a stock like this, when it's flatlining, is never a good sign to a speculator. But to a longer term investor, it's a beautiful sign, and it's broken up out of here. It could be ready for a bit of a setback to maybe around just below the $2 level, but overall, over the next say 6 months to a year, I feel the uptrend will develop in this stock because of the beautiful accumulation action we've had here. And we should see this easily move up to around the $3.50 level, $4 over the next couple of years, and that's my expectation for my portfolio. Ticker NSSC, and I wanted to put this up here. Different types of accumulation. You can see the base actions here, moving up, not getting going, moving up, not getting going. What I would call fails, really, for whatever reason. The people that accumulated their positions just couldn't get a following in the market, but they eventually did, and they eventually got rid of what they bought with these dips. But you can see some of these dips in 91 and 92, 93. The people that bought then are selling out in 2005, obviously with the very favourable long-term capital gains. That's what they're looking for in terms of trading, but this is quite an exceptional base. And an extremely long base, but they're still valid, you know, even though they may take a long time and you may get fooled by them and, you know, lose a few dollars. But if you use that trend line principle that I was teaching you about just here with a pivotal point, draw it along here where my mouse is here, you could sell out there, even though it broke out and came back down. It still wouldn't affect you, and the price swings are minimal here. And you can see beautiful head and shoulders formations, and then the uptrend being broken, then the gradual downtrends being broken. But again, this was all building technical strength for the huge moves that followed. And then you see here, you've got a triangle formation here. You draw a line where my mouse is, draw a line along there, and then one along the flat top. You've got a beautiful triangle formation. You know, sometimes they're good to go 200%, 150, 200%, not as big as these base formations, the moves that develop from them. So I would suspect that this market has the potential maybe to move up to the $7 to $9 area from where it is now, even though we have seen a bit of a parabolic spike, and I necessarily wouldn't be buying into this where it is now. But I'm pretty confident it will move higher from here. And if you draw a line from where my mouse is here and you draw it up to there and you draw it up and you just follow it up, you know, once it breaks say the $6 level. Once it's had a parabolic spike and a bit of a distribution, perhaps that will be the sign. Perhaps it will go a lot higher, up to 8 or 9, and then this line here will go all the way up to maybe around the $7.50, and you can use that as an automated stop to get you out of the market. But you'll be able to identify it through these distribution swings. Very rarely does a move like this not end with distribution swings like where my mouse is here. Tasar, T-A-S-R, famous on YouTube for tasering pregnant women and innocent bystanders on Texas highways. But you can see the fabulous accumulation action here. Nice pivotal points at the bottom, multi-year bottoms, the breaking of gradual downtrends, the tight triangle formations, the flat tops breaking out, and then again here, bit of a flat top triangle breaking out, massive spike up from 9 to 18, 100% move. I would suspect that this move isn't over, but it may well be subject to a setback because of the explosive nature of the move. I'll just flick back to that actually. I just flicked off it by accident. Because of the explosive nature of the move, it may be coming back to consolidate around the $12, $13 level and perhaps move up from there. But from the looks of this accumulation action here, this stock from the breakout point of say $5, $6, I would say is good to go at least a couple of 100% over the next couple of years, or maybe that would happen in the next 6 months, but it should move up to around the 17 to 18 dollar level, which it has done. And that's where it presents a few issues, you know, in terms of, is this the parabolic spike and is this the distribution that's developing, and only time and price action can let you know that, and that's why it's not good to anticipate. But in terms of being cautious, if you draw a line here where my mouse is here, starting in say April, I think it's April 2012, you draw a line up, you draw a line all the way up, you know, somewhere to around the $12.50, $13 level. I've put my stops at around the $11 level. I'm not selling out just yet, but again I might move my stops up to around 12, and maybe I'll even lighten the load. But I suspect that, you know, this market, if it is distribution, maybe will come down a bit more and then shoot back up to 18, and I can unload a little bit more. We just have to see how the price action develops, but you can clearly see that this is nice accumulation action, and with the triangle breaking out, you know, good to go at least a couple of 100%. It just happened a lot sooner. But you know, with this consolidation action here, just above this consolidation action, resting just above it, you know, I've got you know, a sneaky suspicion that this market's going to move even higher from here. So that's one of the reasons I haven't sold out, and the other reason is the rule of it not breaking the long-term trend line yet. But it could revert to the longer-term trend of 12, 13 and then move up from there. But I would say I'm confident to hold on to this for the foreseeable future. Ticker SPCB, quite a new stock here, hasn't been listed that long, and you can see the nice action. When it listed, it was, you know, probably suffered a lack of marketing, a lack of market makers and influential investors in the stock, and it steadily moved up and had people buy into it, and looks to have formed quite a nice trend here. And then I'm just showing you the difference between the price swings here from 6 to 4, when the price swings here were tiny in comparison, and here as well. This particular action here, you can see it's broken out with this price swing up. I wouldn't be surprised to see this move higher from here. This is a stock I've been tracking for a while, and I've had a position in this, and I've recommended it before on the Oak Trader. But if you draw a line here where my mouse is, and then draw a line up, and then you keep following it, it has broken that. But quite often, sometimes with an uptrend, you will find the uptrend line broken once before it has its big takeoff, just to fool people, get some people shaken out of the market. And then so if I draw a line along here all the way up, it hits about here. So this is the time to be very, very cautious. Use this as your pivotal points. But if it does break it again and comes below this, I will sell out. But at the moment, I've got a feeling that it could be the rule that I use, where it breaks it breaks the uptrend, and that is the false signal, and it gets people in the wrong position, and people become short the market, and then the market bounces even higher and goes even faster on the upside. Ticker symbol CNIT, and this is an example of very short-term accumulation action. Took a chance because it was such a tight range, and it was such a tight range here, and it went up here and distributed a little bit. People weren't sure, there was a lot of shakeouts going on, but I was very confident in the tight range of the market, and because it hadn't broken the pivotal point, the downtrend line, if you see where my mouse is in 2012, you draw a line along there, this point here where my mouse is just about touched it at 1, and you can see here that it never came even close to it, again for months and months. But you look here, gradual downtrend lines being broken here, different action in the market, a lot more excitable, breaking out of the dull trend that it was in. And then also, if you draw a line along the big downtrend line, you know, this move here, I like to see these when it breaks out of the base here, and just above the base, if you draw a line up here and then you draw a line here, you've got a kind of breakout triangle, and I like to see that just sitting above the base area. Well, I say sitting above it, was 200% above it, but that's usually a pretty good signal that the market's going to move higher. This looks like a bit of distribution here. I have unloaded some of my holdings, and what I'll do, again, I'll just wait for the rule to confirm, but I'll just wait. If you draw a line where my mouse is here with the pivotal point up, and you draw it up, and then around the $6 level, if it breaks that on the downside, I'll sell the rest of my holdings. But this has been a very good trade, and my downside risk was minimal. As I said, I used not a stop on this, I used a mental stop because I'm pretty close to the market. But if I was taking off on a expedition, or hitting the jungle for 3 months, I would have put in an automated stop. But if you draw a line here, you draw a line along there, the downside risk, if it broke that trend line, I'd have sold out. So I'd have pretty much maybe lost 1 or 2%, not even that, from my position. And as I say, I don't get my full position until it breaks the gradual downtrend lines, if you look where my mouse is. And again, it was just a clear ride up. So that's the chance when you go in on a short-term accumulation action. You're not sure if it's going to go up. It could come back down, say from here, and spend another 4 or 5 years or another 6 months trending. But again, the trend line at the bottom will take me out of the action, and I'll try and look for another opportunity that I feel is ready to move. Okay, on to the healthcare DSKX. Pretty new issue here, some wild swings. I'd suspect not too much industry coverage or liquidity in the market here. Some big swings down, knocking out any stop losses. Not that much of a liquid stock. If you draw a line from where my mouse is, from here to here to here, about the $3.50 level, I would say once it breaks that, that's my signal to buy into this particular stock here. And you can see this steeper downtrend line broken as well. Now, usually I wouldn't even consider such a short-term action, but because this is a new issue, I do quite well on new issues that are dogs that come out, and I wait 6 months, a year and a half for them really to get beaten up, and then I go into them, and it seems to be quite a good way of making money. But again, if I draw a line here, or let's say from here, I draw a line up, if it breaks the sort of 220 level, I'll look to sell out. I have bought lightly in this, in anticipation, even though I shouldn't be anticipating. But one of the reasons was because it broke this short-term consolidation level going sideways here on the upside. So I try to anticipate it a little bit, and as I say, I feel from here that once it breaks the $3.50 level, this line here where my mouse is, once it breaks that on the upside, this should have quite a clear run up to $4.50, and who knows from there. I'll just have to follow the price action and the trend line. Estee Lauder, Lauder, EL, ticker symbol. You can see this has gone from 10 all the way up to the 75 level since the end of what you would call the recession, or the end of the reality of the recession, because the recession never really ended. I mean, the unemployment rate hasn't really got that much better. It depends on what metrics you're using. The metrics they use these days makes the unemployment rate looks a lot better, but reality is not what counts in the stock market. And you've also got a world that's booming at the moment. You've got Cambodia, Nigeria, Turkey, China, all these countries, and all the beautiful women contained in those countries all want to look good. And Estee Lauder are benefiting from that, and the market's moving steadily up. And I would say that this action here, where my mouse is, if you draw a line, a flat top triangle with a breakout, where my mouse is, if you concentrate, draw a line at the top, then draw a line at the bottom. Sometimes we do see shakeouts from these flat tops, but I'm pretty confident if you're a short-term speculator that this is the type of move that makes sense. And I'm just trying to convince myself to take a position. But again, if you look here, draw a line across the top, you draw a line going down, you've had the breakout, and then what I like to see is the shakeout coming back down to the top of the old highs, and that really negs people out. I love to see that. And then you draw a trend line and you can see it breaking up and it's building power. And this is a perfect example of a stock that went from $10 up to 75, but it's still really, I feel, not ready to go down. It hasn't really had the parabolic spike, and it hasn't had the huge price swings that I would associate with distribution. So I'm confident that this market will move higher from here, and I'm looking to lightly buy a bit more of a speculative position for my portfolio. Ticker symbol REV. Wanted to put this up here, parabolic spike up from 6 to 20, and then the consolidation phase. If you draw a line from the top all the way down to here, and then draw a line from here down to here, you've got a breakout triangle. And these breakout triangles are usually good to go a couple of 100%, somewhere from the region of 16 to maybe somewhere around the 45 level. I believe this has the potential to go to, and I love to see this. It breaks out really strongly, getting people on the upside, and then it comes shooting back, and then everyone gets whipsawed and the market moves higher. That's a classic sign. And then if you draw a line from where my mouse is here, it seems to be building a new box consolidation area, although this kind of looks a bit like a Head and Shoulders and a little bit of a parabolic move. So I would be a little cautious here. And if you draw a line up, follow the trend. You can use that as your selling point, if it's wrong on the downside. And that's what I'll do, and I'll be going long, looking for this to move up. Bit of a short-term trade, but I feel that this market has potential to hit the $35 to $45 range in the next year and a half. Marcus Corp, I think this is onto the real estate section now. MCS, not real estate, sorry, hotels and motels, similar but a variation of real estate. Big drop here, weird looking stock. It's not the type of price action I like to see. Quite tight ranges, but quite bouncy looking stock, and I don't really like to see that. But it's nature, it's the nature of this stock. And you can see something very similar here when my mouse is back in 99. You draw a line along the top here, and then you draw a line along the bottom. Nice breakout, flat top triangle. That didn't make it 200%. It only went up 100%. But again, if you draw a line, remember I said follow the trend line up. These shakeouts, these distribution areas would have got you out of the market. So sometimes you don't need to use your brain. You just literally put in what you need to do before. Even though stops do get hit, and the people in the market can see your stops, and it's a little bit like going into a poker game with the professional players knowing your hand. So long as the technical position in terms of the timing and the weight of the market is in your favour, your stock won't be hit until it's time to be hit in terms of it breaking its trend. And you can see that this did break its trend and came back down again. But if you draw a line here and then you draw a line here, very similar. Perhaps we're looking at a breakout triangle moving up to around the $24, $26, and who knows, it could develop even higher from here, because I feel that this move should have gone higher, but something went wrong here. Probably something to do with over leveraging and the recession, but I'm not going to waste my life looking into it. All I know that that's history, and what I can see here is that the investors involved and who bought in at this area have lost money. And when they've lost money and the market is going sideways like this, they get very negative and sell out. And this particular stock looks like it's developing into an uptrend, and I wouldn't be surprised to see this hit the $18-20 region in the next few months. And if you go back in history, back to 91, 92, you can see beautiful accumulation action here, very tight ranges, great little flat top triangle consolidation and moving up, and that's a great example of a good looking move. Ticker symbol OEH, Orient Express Hotels, big steep downtrend broken, the gradual downtrend being broken just here, and this is the breakout of it. Consolidation developing higher above this area of accumulation action here, and it looks to be developing into an okay base. It's a $5 range, so it's not as tight as perhaps I would like it to be, but if you draw a line along here from the bottom along the top, you know, use that as your parameter around the $11-12 sell side, you know, in case it does drag out for even longer, you know, and look to sell out if it drops below 12. But it looks here, you know, once it breaks this area, that it's going to develop the power, you know, to move much higher from here. And I wouldn't be surprised to see this stock hit $20, $25, $30 in the next 6 months to a year. It's looking very, very promising. Morgan's Hotel Group, MHGC, great looking stock again, steep downtrend broken, telling me that people are absorbing the supply of the stock. Downtrend here being broken, and then here the nature of the market, the sideways downtrend being broken, and then the consolidation forming above the area of consolidation, proving to me that there's strength in the market. And that's why I like charts, because they tell me the truth. You can't lie, and it's quite obvious to me that there's strength in this particular market. Whether it has another shakeout and takes a while for it to move up from here, I don't know, but again, use the downtrend line here along here to use and minimize your downside risk. But I believe once it breaks this level, it's going to have quite an explosive move upwards to 12 to 14, and we should see this easily hit from the power of the base that's developed around the $18-20 level quite easily over the next year. Intercontinental Hotels Group, IHJ, again a very high level stock, $6 here, back in March 2009 roughly, and then all the way up to $33 mark roughly, and you can see the consolidation area it's broke out of. Draw a line along the top and then draw a line along here, and you've got a nice flat top triangle it's broken out of. And I would say that this has got the power, you know, to go to at least 36 to 40 in the next 2 or 3 months. It's in a heavy uptrend, but it doesn't look like it's going to go down really anytime soon. Of course it could have a shakeout, but I do believe it will move much higher from here. This could be a bit of a short seller's trap. You see these little moves down here, trapping a few people that had the idea to short this particular stock, and it looks like the people who shorted the market here and here are trapped, and as their life is extinguished, we should see more and more parabolic spikes here as they close their positions. as they buy to close. So yeah, it does look like that they've been trapped. We'll see from here, but I would say that this could easily go to around 38 to 40. Again, it's a very speculative, shorter term trade. I like this as well, just to go back a little bit of a lesson from history here. If you draw a line along the top here, I'll always like to see this whenever where my mouse is, it breaks above the old high and it's got a dip in formation after a rise up. That's quite a good consolidation. Sometimes we see after 2 or 3 years of the market rising, a nice, say, 2 or 3 year triangle developing. Well, this year consolidation area here can just be as powerful, and it is almost like a triangle. If you draw a line along the top and a line along there, it's like a breakout triangle, but it's very similar in its power. As it breaks down, the professionals or the people who have the idea that this stock is a good buy, and the people that are panicking switch places, and the people that buy it buy in here and support the market, and the people that panicked sell out, and that's where the technical position of the market changes, and then it moves up from there. And I can see this, as I said, going up to around the $38 to $40 level. Hyatt Hotel Corp, H. If you draw a line along the top down to here, and then a line along the bottom here, you could even maybe draw the line here. I'm looking at this as a kind of breakout triangle, and I was watching this as it broke out, and that was quite nice, the move up and then coming back down and then moving up, coming back down. To me, if you draw a line just here to here, and then you draw a line here, it's maybe got the potential here for a breakout triangle and a bit of a spike up, parabolic spike upwards. So I'd be quite confident on a shorter term basis to speculate in the Hyatt Hotel Corp, and I'll be looking perhaps to take a position in the next couple of days here to go long for the next, say, 2 or 3 months, and I would suspect that this market's got the power to move up to the $55 to $60 level quite easily as well. So it's just looking quite good. I don't know, sometimes you get that intuitive view of something when you're looking at it, because you've looked at so many charts before, but this to me looks like it's going to shoot up. I mean, I've seen shakeouts from similar positions, but the tightness, it's like a springed coil ready to shoot and spring out on the upside. So I would suspect that we're going to see new highs in this particular stock, and it's a long for the Oak Trader. Okay, that's it for now, and hope you all had a good new year, and people in New York and Minnesota and Minneapolis, stay inside. It looks terrible over there at the moment, and hopefully in the next couple of months things will get better, and springtime will be upon you. Okay, that's it for now, and I'll speak to you soon. Bye now.